Hello guys, welcome to my channel. My name is Kane, and today I really want to talk about the crypto market a bit because after the FTX incident, I really feel the market is pretty weird because the market is extremely having a low volatility right now, and I feel like it is a calm before a big storm. So I expect something really wild is coming ahead in the crypto market. And if you ask me whether it is good thing or bad thing coming ahead, and I really predict that it is something bad coming ahead. So we'll talk about this in this video. And if we look at the Ethereum price in the past week, we have extreme low volatility. In the past, we can have a look in the chart. 1 2 3 4 5 6 7 8 9. So we have a little bit bounce after the FTX incident, and we have 9 to 10 days sideways chop after the incident. And if we look at the percentage change, it only accounts for 14% change in the past 10 days. So it is extremely weird, and we have whenever we have a sideways wedge pattern, it tends to have a really big breakup or breakdown after this kind of wedge pattern. So it is forming we can see that there's a downward sloping trend line and a upward sloping trend line, and we don't know whether it will break up or break down yet, and we will talk about later. And I really think there's a higher probability to break down because we are now in a cycle of deleveraging. What it means is everybody is seeking for liquidity at this moment, but some people may say even so much shit happens in the past 2 weeks, but price it is still not going down, so it might be bullish. But I do not agree with this because if we see the DXY, let's check up the dollar index DXY. If we check on the price of dollar index, the dollar index actually break down a lot. And also if we check the SPY, which is Standard and Poor, the US stock up a lot. And in the previous few months, we can know that the crypto market is actually highly correlated with the dollar index and the stock market. So as the dollar index drop a lot, when dollars drop, then we expect the crypto market also pump. And if we see the stock market pump, and we should expect the crypto market also pump. But in the past week, we didn't see this kind of correlation. Even the stock market up a lot and the dollar index dropped a lot, but the crypto market only goes sideways, so it is not a good sign. If the dollar down a lot and crypto goes sideways, but what about if dollar index go up again? Then I expect crypto market should follow the previous correlation. When dollar goes up, then the crypto will go down a lot. So this is one of the signals that I think the storm is not looking good upcoming. And the second point is that in the cycle of deleveraging, everyone is seeking for liquidity, so as the centralized exchange right now, they are lack of liquidity, and everyone's require them to prove their reserves. So they obviously, what they are going to do is to when price goes up, and they will sell the shitcoin on their hands, like Dogecoin, Shiba. If think about, if you are the CEO of crypto.com and you have 19% Shiba coin, and everyone require you to prove your reserve on hands, then what will you do when Shiba coin goes up? Of course, you would like to sell some of the holdings to prove your reserve. So I think the sell pressure is very large right now, and if price goes up, and many institutions would like to sell their stock on hand. So it's the second reason that why I don't think it is good upcoming in the crypto market. And the third one is that there's no new capital coming in the market until clear regulation to protect the retail clients. So I don't think there are much capital will inject into the market in the short term. So of course, if there's no new capital, then we cannot expect the price to have we cannot expect the market will have the bull cycle, bull run in short term. And the fourth point is that the existing capital tends to be parking on the sideline. And also one of the points is that when we look at the Ethereum chart, let's look at it. The Ethereum chart is actually looking pretty decent, and you see the low in June is actually not broken, and it is a sign that I think the bear cycle is definitely not end, because when bear cycle needs to be end, then the market maker need to flush everyone's out. And obviously, if you look at the Ethereum chart, and the market maker didn't flush anyone's out until a new low is made. As the new low is not made and it's looking pretty, the price is actually stands as 1200, which is the same as a few months before, even after so many shit happens. So I think that the market maker is gonna do something in the upcoming 1 to 2 months, and as long as the new low is not made in Ethereum, I don't think the bear market is over. So I'm patiently waiting for that. So concluding the 5 reasons I've mentioned, I think the breakdown situation has a higher probability. So I'm planning some strategy on that actually. I think there will be 2 scenarios happens in the upcoming few weeks. One is that we can see that there are some manipulative pops recently, like this one. When we see this kind of pops in a very short time frame, it is a sign of manipulation. That means the market maker is trying to pop up the market and trying to short hunt the short position. And once you see, you can see that the price just over the previous short-term top, and it kills a lot of short position. So it is actually creating some short squeeze to reduce the short position on retail on hands. And once they have, maybe they will create a larger short squeeze, like the price might hunt until 1300 and create an illusion of next bull run is coming. So when every short position holders close their short position and becomes bull guy and open a long position, then the market usually turns in this way. So one situation, maybe the price will goes to 1300 and then turns around. This is a pessimistic situation that I can think of. The other situation is more optimistic, is that the market will break down the wedge pattern and then goes down. So this is the easy situation. The hard situation goes up to stop hunts until 1300 or even more than that, and then goes down. So these two, which situations comes true, and I still think the bear situation is eventually coming. So in light of this, I'm prepared. I'm already accumulating some short position in place. But talking about short position, if you do not do any short position, or you do not know how to do a short position, and you definitely need to learn about it. And previously, I usually do my short position on some centralized exchange like Binance, Bybit, FTX, and of course I have some money in FTX also, but those money are totally gone, so let's not talk about it. And right now I'm doing the short position on a decentralized perpetual trading platform called DYDX. And what's good about DYDX is that everything on DYDX is USDC related, so they don't have USDT pair for you to trade. So I think by trading USDC perpetual pairs, I can actually afford the bomb of Tether. So no one knows whether Tether will be the upcoming bomb, but it has a pretty high chance because even they have an audit report released, but it is not as transparent as USDC. If you look at the audit report of USDC, it is extremely simple, just 100% cash equivalent, all in US dollar. That's it. Nothing. No treasury bills even. If you look at a BUSD, they are holding treasury bills. But if you look at USDC report, just US dollar, 100%. That's so simple. And if you look at Tether, then it consists of a lot of things like bonds and short-term notes and stuff, and some cash equivalent, and you don't have 100% transparency of what they are holding currently. So I don't want to bet against that and take the risk if possible. So this is one of the good of DYDX, and it is that they offer USDC perpetual trading pairs. And the second point is that the reserve is extremely transparent. You can just, because once you deposit your money into the platform, and your money will be locked up in the smart contract, and you can actually see your money in this website, everscan.io, and you can check the USDC in the reserve. Actually, the total reserve they have right now is 384 million USDC. So as long of course, smart contract can be hacked as long as you are not the last one withdrawing the USDC, and then it is okay. So what we need to do is just monitoring this web page every day to check whether there's something happen or reserve is starting to be shrinking. Then it is a warning sign to withdraw some money out. It is the current situation in crypto market. You need to be extremely agile. When anything doesn't look good, don't think, just withdraw everything first and swap to other asset. I'm not saying USDC is 100% okay. If USDC someday some rumors comes, and I'm ready to swap to other asset like BUSD or even DAI or even USDT. So there's no loyalty to any assets right now. It's the reality in the current crypto market. So be agile, guys. The third point is that the good of just DYDX is that it is very similar to the centralized exchange. But of course, if you see the charts like this, it means that the liquidity and the market depth is not so good for some pairs. For Ethereum, it is pretty good, the market depth is okay, but for other pairs and some altcoins pairs, the market depth is not so good. So you can see that the UIUX is okay, it's quite similar. But one thing is that they do not have Android apps provided. So if you are a mobile trader, then it's not good for you. If you are using iPhone, then it's okay because they have an iPhone app. But if you are using Android, mobile trader on Android, then it's not good for you. Then what you need to do is to use your MetaMask browser and then connect to DYDX then. And talking about the pairs they have provided, and they only provide around 30 to 40 pairs, and on the number of pairs it is not a good number. Like if you want, I always like to trade CEXs recently because of the World Cup coming. Then there's lots of opportunity created around CEXs Chilis coin, but they do not provide Chilis in the platform. So the pairs that they have provided is obviously not enough. But of course, they have a solid reason of not providing so many pairs, because if they provide and they do not have enough market makers to provide the liquidity, then there's no meaning. So they need to grow the platform first. This is their first mission and the objective that they need to fulfill. So in summary, it is DYDX is an interim solution until the landscape looks clear in the centralized exchange. Otherwise, I think I would stay to DYDX in the upcoming few months. If everything looks clear and those CEXs provide their proofs of reserve, then I might shift some capital back to the CEX, because they really provide a better UIUX, and in terms of listing pairs, they do a better job than DYDX indeed. But in terms of decentralization, of course DYDX is better than those CEX. So I think don't ever put all your eggs in one basket. It's always good to experience the DYDX and decentralized stuff. So some capital in decentralized protocol and also some capital in centralized protocol is what makes us survive the crypto cycle in the end. Thank you very much. Prepare for the big slump coming ahead in the crypto market, and stay safe, guys. See you.